So here's the mistake I made with naked puts is size, contract, number of contracts. Plus I like to play earnings. That I'm not going to change. I like to play earnings. Now I've got a lot of naked puts here, as you can see. And the ones that are really hurting my buying power, if I go back to balances, you can see that my total buying power available, what's left in Canadian, total combined Canadian is 24. But I started off with much more, and I'm actually using, let's see how much percentage I'm actually using. So you see that my total in Canadian cash is 21. That should be my buying power. Plus this 39 is what I'm actually using up for my margin. So what I'm actually using is I've actually finished up my 21 and I'm using an extra 39 from my margin, and I have 24 remaining. So if I'm gonna add 21,304 plus 39,405, I'm actually using 60,709 and I've got 24 remaining. So just to make it simple, 24,000. So I'm using 60,000 and I've got a total of 84. So 60 divided by 84, I'm using 70% of my total buying power right now because of the positions that I have open. And the ones that are killing me the most is really Peloton, PayPal, and I believe Snap and Zillow, of course. Now Roku, as you can see, the strike is 160 and 120. Because it's so far out of the money, it's actually not using that much buying power out of me. So if I open my trade log and just look at the buying power requirement, so it's on this tab here, buying power. So Roku is a 50% margin requirement stock. So if the stock is trading at around 235 and I've got the 160 strike, it's taking 4250 US buying power out of me. So actually Roku is this, the 160 is actually taking a lot of buying power out of me. This one here, the 120 strike, is taking about 1800 buying power. Now the risk is if Roku drops to 200, then this one takes 2000 and the 160 put will take 6000. So that's the risk here, is if Roku continues to drop, it has dropped a lot. I don't understand if it's even justified, but yeah, it dropped a lot. I mean, it's got a P ratio of 112. It's making money. I mean, it had a 52-week high of 490 and all of a sudden it's at 234 as if nothing happened. That's crazy. I think it's at a 52-week low. Yeah, crazy. All right, so back to my position. So we've got this 160 put that's bothering me. Let's look at Peloton. This one for sure is taking a lot of buying power out of me. Peloton's trading at around what I think it's trading at 45 or 47. Peloton's 47. It's trading at 47. It's a 30% margin requirement stock. So if I go back to my spreadsheet here, so it's a 30% margin requirement stock. Market price, we said 47. I've got the 70 strike, but I've got 3 contracts. So it's taking 11,000 US buying power out of me. So that's definitely the biggest one here. It's killing me. Let's see what else I have that's hurting me. So if I go back to account here, positions, PayPal 179, I think it's trading at 195, PYPL 193. Wow. Okay, so it's also a 30% margin requirement stock. 193. Sorry, I've got the 175 strike, but I only have 1 contract. So this one's taking 4,000 US buying power out of me. So yeah, I have to take care of that one. So I've got PayPal, Peloton. Let's see how much Pins is taking out of me. 65 put. And I think Pins is trading at 45, maybe 40. Yeah, 45. So I've got the 65 put, 2 contracts. Now let's go see how much that takes out of me. So 45 and 65 and 2 contracts. So it's taking 6,700 US. So it's taking a lot of buying power out of me as well, US. And then next, so Peloton, PayPal, Pinterest, and Roku, I said as well, the 160. Let's check out Zillow. Zillow is trading at, so these were all earning plays that just went completely bad. So Zillow 56, it's a 30% margin requirement stock, and I've got the 75 put, very sad. So 56 is the market price, I've got the 75 put, I've got 1 contract, so it's taking 35.80 out of me, so that's a lot as well. So that's what's really killing me right now, and that's the mistake I made with naked puts, is First of all, some of my trades have got more than one contract, and I'm using more than my available buying power because now I'm in a position where I don't feel comfortable opening new trades because I'm using 70% of my buying power. And if market decides to correct that, even if it just corrects 10%, even if the market just corrects 10%, I'm going to be very close to a margin call. I might be forced to take losses because here, let's look at an example. If, as you can see, let's say right now I'm at 35.80 with this position here on Zillow. If it drops, let's say another 10%, it drops, I don't know, to 50, my buying power required goes to 4,000. What if it drops to 40? My buying power increases to 4,700. Same thing for Peloton. I've got Peloton is what at 47. I've got the 70, and I've got 3 contracts. What if Peloton drops to 35? I mean, my buying power increases. So all my positions will all of a sudden require more buying power out of me without even doing anything. So that's the risk here that I have to watch out for. I've added more money to the account, and even with the extra cash, it did not help much. So I'm going to have to, there's something that I'm thinking about, but it doesn't seem good or smart, but basically I could roll, for example, let's look at PayPal. I can roll it all the way to January 2024 just to roll the strike down to 120, and without paying anything, I'll collect a small credit. So I could roll the 175, February 18, 2022, the 175, roll it all the way down to January 2024, the 120 strike. Now what that does is, if I go back and look at PayPal, which is at 193 right now, and I've got the 175, I've got one contract, it's taking almost 4,000 buying power out of me. But if I manage to roll it all the way down to 120 strike, it's only going to take 600. So I'm going to save a lot of buying power if I can do that. Even though I'm not going to be able to close the trade, but what I'm trying to do here is save some buying power. Now the risk with that is, what if PayPal continues to drop, which it shouldn't, but what if it does? What if it drops to 150? Then the buying power comes back up. What if it drops to 120? Then it comes back up to 3,600. So plus I'll have the January 2024 expiry. So I'm going to be sitting on a big unrealized loss if PayPal drops to 120. But my buying power will be only 3,600. So it's going to be good for my buying power, but it's going to be bad for my equity because I'll be showing a big paper loss or unrealized loss. But assuming things go back to normal and PayPal recovers as it should, then this could be a safe way to reduce my buying power. And as you could see, if I do this with PayPal, I save about 3,000 buying power. I said 175. Yeah, I save about 3,300 of buying power. And now what if I do it with Peloton as well? Peloton is at 47. I've got the 70 strike, and I've got 3 contracts. So see, that's another mistake I made. I played Peloton earning. I did one contract that I started too early. I went with the 81 strike or 82 strike, and then Peloton kept dropping before earnings. Usually I like to play earnings right before the close. So 15-30 minutes before the close. I played it 4 days in advance just because I saw Peloton drop. So I started off with one contract at 82, and then Thursday before the close, Peloton dropped even more. So I sold the 70 strike, I believe, or 72. I think I sold the 72 strike. So then I ended up having 2 contracts on Peloton, and then after earnings it dropped to 55 almost. So when I rolled the 72 and the 80 that I already had, I added an extra contract to be able to bring the strike lower to 70. So I ended up with 3 contracts when I should not have done that. I should have just respected my 1 contract per trade because I have to respect my buying power. So yeah, so right now Peloton's taking 11,000 out of me. Now I already checked this. If I roll to January 2024, I could bring it down to 55. And see, that would bring my buying power to 6,000 instead of 11,000. So I could save some buying power by rolling all the way to January 2024. So I can bring the strikes lower, and that way I can reduce the buying power that these existing trades are already taking out of me. But the risk with that is, if the stock continues to drop, I'm going to be showing a very big paper loss, as I already am showing quite a big paper loss. Not only that, but if it goes up, I can't even close it for a profit because there's still so much time value left. It's not going to decay fast enough for me to be able to close the trade for a profit. So I'm going to be holding on to the trade for a while. So that's the risk of rolling to all the way to January 2024. But I might have to if I want to keep trading because I don't feel comfortable opening new trades with only 24 K capital remaining, buying power remaining, especially that it represents 30% of my total buying power. Now I am using my RSP to place other trades. A new trade that I made this week was Lightspeed when it dropped so much. I did a covered call at a 55 strike. So it's similar to selling a put at a 55 strike, but instead of doing it in my margin account, which uses margin, I did it in my RSP so that it uses cash. So it's like a cash secured put basically. Now let's look at Snap. I've got the 60 put. I've got 2 contracts. Snap is trading at 51. See, that one's not so bad. It's only 9 points away. I don't think I need to take action on that one. But I've got 2 contracts. But let's just see how much buying power it's taking. So 51. I've got the 60 strike, 2 contracts. So it's taking 48.60 out of me. So it's still a lot, but it's not that that deep in the money for me to roll it to January 2024. But the ones really that I should roll to January 2024 is probably Pins, Peloton, PayPal, and I'm not sure about the Roku 160. It's taking some buying power, but I think I'll just leave Roku. I'll leave the 2 Rokus. Oh, and Zillow. Let's see what Zillow. I forgot how much Zillow is taking out of me. So Zillow's at what, 56, and I've got the 70. It's taking 6,000. Wow. Oh no, 1 contract. Sorry, it's taking 3,000. Yeah, I think I'll just keep Zillow. So I think I'll just roll. I'll roll Peloton, Pins, and PayPal. So 3 Ps here. I'm gonna roll them to January 2024 just to release some buying power, so I can keep trading. Right now, next week earnings, we've got. I think Zoom has earnings next week. I think Monday after hours. I usually like to play Zoom with a naked put. Now I can't even do that, of course. PE is 77, so it's finally starting to make money. Look at this. Last year, look at Zoom's chart. It's really scary. It could be one of those stocks that drop 30% after earnings. I mean, these days we've been having a lot of stocks drop 30% plus, but usually it's stocks that are not really making money. But Zoom is making money, so hopefully that's not the case. I still would not dare to do a naked put on Zoom right now because of my buying power. Let's see how much I can get right now. Well, this is not the true bid and ask. But the last traded price, you've got 190. The 190 strike was paying $1 on Zoom, so that would have been good. Otherwise, what's the expected move? Expected move is 13 plus 14, so about, let's just say 30. So the 220 strike pays about $4, so could have done that as well. So I could probably, yeah, I can't do it. I want to do it, but I can't. But let's see, let's just see how much. So if Zoom is at 250 and I sell the 220, it's going to take 4,500. See, it doesn't take that much buying power when you start the trade. The problem is if it goes really bad against you, if the trade goes bad or goes against you, and let's say it drops to 200, then you see it went up to 8,000. But yeah, that's the risk you take. And yeah, I don't know or I could just do a put spread for $1 and then that takes only 400 capital. But then if it's a loser, if it's completely breached, then I can try to roll it as a naked put. But I have to play Zoom. I like playing Zoom. It's been good to me, so I have to play it. But either I'm going to do a put spread or I'm going to do a naked put like really far, like maybe the 190 strike. Although, what if it drops 70%? What if Zoom drops 70%? It'll go to 175 if it drops 30%, sorry. I don't think it will, but I also didn't think Peloton was going to drop 30%, so who knows. But Peloton isn't making money yet, so maybe that's why. So I'll probably do a put spread, or let's just see how much buying power the 190 would take. If I sell the 190, it's going to take 1,500. So see, this is fun. So I could probably sell the 190 put for $1. Yeah, I mean, that's what it was last trading for here. The last trade here, 190 strike, was paying $1. So maybe I could do that, try to make an easy $1, an easy $100, and being 60 points out of the money. Although I'm pretty sure Zoom's going to drop after earnings, just because it seems to be part of those other group of stocks that have gone up like crazy during COVID, and now it's just like everything's getting deflated. Anything that went up hard during COVID is crashing back down right now after earnings. We'll see. So yeah, that's the plan. Yeah. So just want to share with you the dilemma I have, or the mistake I made with my naked puts. So if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.